G'day ladies and gentlemen, hope you're all having a wonderful weekend and welcome to this week's trade recap video sponsored by O1. Hope you're all having a good weekend guys. Before I get away, don't forget to please hit that like button, just help me get the content out there, be much appreciated. Also leave a comment down below, let me know how you went throughout the week. And just some housekeeping before I get away guys, don't forget the VIP is open, so it's only been open for a few weeks. I appreciate this show of support. So far it's been a pretty good intake. Thank you guys for those who have joined. For those who have been considering joining, if you want to know more information, send me a DM either through send me an email, or you can hit me up on the social media websites. But it is definitely worth it. There is so much going on. There is something going on daily, some live call going on daily, and we do trade together obviously on during London session and for NY session for at least 3, sometimes 4 days a week. Plus there's so much educational content pre-recorded, over 80 videos. So if you are interested and you need to know a little bit more, want to know a little bit more, don't be shy to contact me. And also don't forget there is that discount code for the monthly membership. Use code OGVIP in capitals. And for if you want to pay on the annual basis, use code annual VIP. So that's just enough of that guys. So we'll get straight into it now, and we're going to have a look at a trade taken this week on gold. So first of all, it was a really good week. Been a really good July. Obviously, it's been a fantastic year, to be honest. Just continuation of the same thing, doing the same thing over and over again. First of all, creating a plan, and then coming up, creating some rules as well. And then just simply waiting for price to get to our predetermined levels, create those rules, and wait to see if it tick the box, turns out, and if it does, we know there's a high probability it's going to end up in a favorable trade, as did this one on Tuesday. So what we have here is gold. Now this was Tuesday at London Open guys. So what we can see is gold was, well, first of all, structure was bullish, bias was bullish, but what we have was the previous daily candle closing back a strong bearish candle. This is Monday. It was a strong bearish candle. Granted, still at that resistance, but still a lot of strength within that candle itself. So that starts to give me confidence to look for any sort of sellers, seeing we have that strong bearish candle. Also, what I did mention was, as long as we respect the 50% of that previous daily candle, if we were to draw in a fib, there's a high probability. Eventually, we would make a push to the downside and potentially retest the low of the previous daily candle. We literally tapped into the 50%, rejected, and that was one of the catalysts to suggest we could be ready to head back down. Now, onto 30-minute time frame. Now, still bullish in structure, believe it or not, from this impulse to the upside from the news, from as long as it remained above that wick, and it's still the case now, guys. We were to remain bullish, which we did do. However, had a bit of a trickle towards London Open, so we created a pullback and started trickling down a little bit. No real catalyst on the 30-minute. As we can see, we closed above the support. I marked this in as the aqua color. That is 15 minutes zone, just to distinguish between the 30 and the M15. The 30 is the blue, the 15 is the aqua, 4 hour is the gray zone. So on the M30 is technically no zone. That is the zone. There's no wick on that candle, which forms support after a candle closing back bearish. So I had to use the 15-minute zone in this case. Just here, you can see it lines up with the bullish candle wick on that particular candle. So we had bearish candle, bullish candle that forms support, another bearish candle. So that's the lowest point of the 15-minute support. And also below that, we could see there was some pretty clean traffic to the left. So seeing the 30-minute rejected, we were still making a pullback. Obviously, we created the high of the day. We approached the minor support. If you guys can remember, towards the end of the pre-London candle, just here, started to pick up some strength and respect this support. So I did then mention on stream that there is no impulse entry for me at London Open. Seeing off the back of the strength of that bullish candle closing back above support, that suggests to me, in accordance to my rules, I know off the top of my head, it's in my head guys, I know my rule would suggest that I need to wait for a candle to close, and has to close below the low of that bullish candle, engulfing it, or if not, very close to it. In this case, what we can see is we have that. So I'm going to go over the entry, starting at first step. All right, number one, guys, we had price approaching a support formed after creating a rejection Creating upper wick on a new daily against the strength of the previous daily candle, strong bearish candle. So number 2, we have the candle closing back bullish, closing in my opinion, well, it's closed obviously right near its high, suggests it's a stronger closure. So that would automatically trigger the alarm bell in my head to say, right, I need to wait for another candle close in a 15 minimum. 3, obviously the next candle, and this was the London open candle, closed strong bearish, rejecting this support, broke the high of the previous, formed a liquidity candle, so broke the high and up breaking the low, closing below. That was my cue. That was my catalyst. Suggest, right, we begin to break below the previous candle we're in. So number 4, stop loss I set above previous M30 high. In anticipation, we had no need to pull back. Once again, above that support, should be safe at that point. Number 6, I was triggered in. I set this, so I set it to the buy stop just about 2 pips below, pip and a half below the low of the catalyst M15 candle. Number 6, price created an upper wick, tagged me into the buy stop. First target was that point there, tapped into it, secured. Obviously, partial was at 10, and I secured more at about 20. It was, and then the rest basically hit TP. I think I had the target at this point here, guys. This support to the left hand side, so basically tapped into it, then rejected. So as soon as I got towards TP1, with stop loss to break even, and that was it. The rest was history. So pretty straightforward entry, guys, for me. Q in this particular case was the bearish engulf into that bullish candle. That is your trigger. Clean traffic to the left, we can see pretty clean. As long as there's enough margin, in this case there was around 15 plus pips, I think it was minimum, which is clean traffic, so enough to at least get to TP1 with the momentum, with the volume at high time volume, obviously time of day. Me, I would take that trade every single day of the week. It's one of my favorite types of entry. So that's a wrap, guys. Hopefully it makes sense. Let me know. Did you take it too? Catch you guys on stream around 6:30 or 6:40 a.m. UK time tomorrow for another big week on the charts. Looking forward to it, guys. Cheers. Have a great weekend. The rest of your weekend. Catch you then. Bye, guys.